What if the most overlooked metal on Earth is quietly setting up the biggest move of our lifetime? Not next year, not someday, but right now, while most people are distracted, complacent, or convinced that this time is different. Because according to veteran market analyst Francis Hunt, something is breaking beneath the surface of the global financial system. And silver is sitting right at the fault line. If you've spent years building wealth, stacking savings, and trying to protect what you earned, this is one of those moments you don't want to scroll past. Not because of hype, not because of fear, but because the math, the structure, and the history are starting to align in a way we rarely see. And when that happens, markets don't move politely, they move violently. Francis Hunt has been studying precious metal cycles for decades. He's not a newcomer chasing clicks. He's a technician, a pattern reader, someone who looks at long-term ratios rather than flashy daily candles. And what he's seeing now in the gold to silver ratio is, in his words, deeply concerning and incredibly powerful at the same time. The gold to silver ratio is simple in concept, but massive in implication. It measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has fluctuated, sometimes favoring gold, sometimes silver, but for decades now it's been pushed higher and higher, making silver appear chronically undervalued. At its recent peak, the ratio hit around 126. That's not just high, that's absurd by historical standards. Then something happened. Quietly, without fireworks, the ratio broke below a critical level near 65. For most people, that number meant nothing. For Hunt, it was the starting gun. That break confirmed a massive macro reversal pattern he's been tracking for years, a classic head and shoulders formation on a scale most investors never even look at. When long-term ratios like this roll over, they don't do it gently. Hunt explains that markets spend years building pressure and then release it all at once. This isn't about a trade. This is about a regime change. The technical targets alone suggest the ratio could fall to the low 30s. But Hunt believes that's just the first stop. He argues that silver isn't heading for a polite revaluation. It's heading for an overshoot. And that's where most analysts lose the plot. Late-stage bull markets don't stop at fair value. They don't pause at reasonable targets. They go too far. Way too far. That's how bubbles form, and that's how generational wealth is made for the small group of people who understand the psychology before it unfolds. Do the math. If gold is trading around $3,000 an ounce, and the ratio falls to 9, silver lands north of 330, and Hunt doesn't think it stops there. In his view, once momentum takes over, silver could run to $500, $800, even 4-digit prices in old money terms. He's careful to explain that these numbers may sound insane today, but so did many historic price moves before they happened. He reminds people that during parabolic phases, logic exits the building. Fear of missing out replaces valuation models. Suddenly, silver isn't an industrial metal anymore. It becomes real money. It becomes protection. It becomes the thing everyone wishes they bought earlier. And that shift in perception is what drives prices beyond what anyone thought possible. But here's where it gets uncomfortable. The supply side of the equation is already breaking. Roughly 60 to 70% of the world's silver production comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver supply doesn't respond quickly to higher prices. You can't just flip a switch and double production. At the same time, demand is accelerating. Solar panels, electronics, medical applications, and now solid-state batteries are consuming more silver every year. Hunt points out that if solid-state battery technology scales as expected, it could theoretically consume the entire current annual silver supply on its own. Not some of it, all of it, leaving nothing for other industries, let alone private investors. That's not a future problem. That's a structural imbalance already in motion, and markets don't handle structural imbalances calmly. Hunt also talks about the biggest mistake silver investors make every cycle: selling too early. He introduces what he calls the law of the parabola. In exponential moves, most of the gains don't come gradually. They come at the end. The final 5 to 10% of the move can account for half of the total profit. That's the part where charts go vertical, headlines turn manic, and rational decision-making becomes extremely difficult. Most people will feel brilliant selling at $100, even smarter at $150, genius level at $200, and then they all watch silver continue to $500 without them. Not because they were wrong, but because they underestimated how extreme late-stage markets can become. Hunt isn't saying never take profits. He's saying understand the nature of the move you're in. Parabolic markets reward patience, not perfection, and they punish those who treat a once-in-a-generation setup like a routine trade. At a certain point, he adds, price itself becomes almost meaningless. When silver is exploding higher and currencies are being questioned, the real issue isn't how many dollars something is worth. It's what those dollars actually buy. Hunt openly questions whether the monetary system looks anything like it does today by the time this cycle ends. Physical assets, he suggests, may matter far more than digital balances. This brings up the question everyone asks, is it too late? Hunt hears it constantly. His response cuts through the noise. If an asset is going to $1,200, does buying it at $80 or $90 really matter? The discomfort people feel isn't about price, it's about psychology. Nobody likes buying something that's already moving. But historically, the biggest gains come after disbelief turns into acceptance. He acknowledges the entry problem. On long-term charts, silver looks like it's already running. No obvious dips, no clean support zones, just a powerful uptrend that feels impossible to join without feeling reckless. His solution isn't reckless buying, it's perspective. Multiple time frames, micro pullbacks within macro moves, patience combined with preparedness. He's not telling people to chase every green candle. He's telling them to understand the environment they're in. This isn't a market that waits for perfect entries. It's a market that leaves people behind. What makes this moment different, Hunt argues, is the convergence. Technical breakdowns, supply constraints, industrial demand, monetary instability, and psychology are all aligning at once. That doesn't happen often. When it does, it reshapes markets and fortunes. Silver has spent decades ignored, mocked, and suppressed. That's usually how these stories begin. Not with excitement, but with neglect. And then, seemingly overnight, everything changes. The ratio is broken, the pressure is building, and the move may already be underway, whether people feel ready or not. History suggests that when silver finally wakes up, it doesn't whisper, it screams. The real question isn't whether silver goes higher. The question is whether most people will have the conviction to stay with it when it does. Instead of talking in theories or waving around old charts, Hunt does something most commentators never dare to do. He opens his actual trading platform, the same one he uses for his own capital. No simulations, no hindsight magic, just real positions, real risk, real money. Bitcoin is on the screen, gold is there, silver too, all trending higher. And Hunt smiles because just weeks earlier the consensus was loud and confident that these markets had already topped. Apparently the obituary was written a little too early. What did we actually get? Hunt asks calmly. We got an opportunity. He zooms into the daily time frame and shows where price briefly pulled back inside the broader uptrend. Not a crash, not a collapse, just enough volatility to scare weak hands and reward prepared ones. Two clear entry zones appear on the chart, small dips that most people ignored because they were too busy staring at long-term charts and convincing themselves it was all over. I took two entries, he explains, pointing to the levels. Stops were placed at relative lows, tight and controlled. This is his HVF method, a system designed specifically for trading macro bull markets using shorter time frames. It's not about guessing tops or bottoms. It's about managing risk while letting momentum do the heavy lifting. Those stop losses, Hunt continues, have now been trailed upward. What started as protection has turned into locked-in profit. He casually mentions the numbers, almost as if they're not extraordinary. Roughly 150% on one position, over 300% on another, and price is still climbing. No chest thumping, no drama, just execution. This, he emphasizes, isn't luck. It's structure. Volatility, in Hunt's view, isn't something to fear. It's the mechanism that creates opportunity. Every pullback in a bull market is a door briefly opening. Most people don't T-walk through it because they were frozen by the idea that they were in too late. That mindset is exactly what keeps them on the sidelines while professionals quietly build positions, while retail investors stare at monthly charts and panic about buying silver after it's already moved from 30 to 80. Hunt is drilling down into hourly, 4-hour, and daily charts, identifying clean setups with asymmetric risk, tight downside, massive upside. It's not exciting, it's effective. Then he pulls up a chart that shifts the mood in the room, a quarterly silver chart going all the way back to the 1950s. 75 years of price action compressed into a single view. And what jumps out immediately is something Hunt calls a squeeze inside a squeeze, a compression pattern so long, so tight, that when it finally releases, the move is rarely subtle. He explains that this wasn't guesswork. The technical structure gave clear signals, a breakout level, a logical place for a stop, a roadmap that suggested silver wasn't just due for a rally, but for something far more dramatic. And then, almost humorously, he says, markets sometimes give you a gift inside the gift. The markets love you, Hunt says, half smiling. I teach people how to let the markets love them back. It's an unusual way to talk about trading, but it captures his philosophy. He doesn't treat markets like enemies to be conquered. He treats them like environments that constantly offer opportunities to those who pay attention. When we're in markets, he says, we're like blind animals walking on pearls, gold, and diamonds. The opportunities are everywhere, but most people walk right past them with their eyes closed. The trick isn't brilliance, it's awareness. That long-term squeeze triggered near $25 with a very tight stop loss and an initial target of $333. But Hunt is quick to clarify that 333 isn't the finish line. It's a pause, a consolidation zone, a place where the market catches its breath before deciding how much further it wants to go. He's already positioned accordingly, holding about half his exposure, ready to take partial profits while allowing the rest to ride. This isn't all-in gambling, it's disciplined participation. This is where the difference between amateurs and professionals becomes painfully obvious. Amateurs ask, is it too late? Professionals ask, where's my next entry? Amateurs feel left behind when price moves. Professionals see motion and look for access points. Same chart, completely different mindset. And just when it seems like the technical case alone is compelling enough, Hunt shifts gears and reveals what he believes is the real driver behind what's coming. A supply crisis hiding in plain sight. He pulls up a long-term gold to silver ratio chart stretching back decades. The ratio has been elevated for far too long, he explains. And the obvious question is why? Why has silver been so persistently cheap relative to gold? Hunt zooms out further, past 2007, past the dot-com era, all the way back to the 1960s. And a pattern emerges. As the world became more financialized, silver became more suppressed. Historically, the gold to silver ratio had natural boundaries. In ancient Egypt, it was around 8 to 1. In other eras, it ranged between 10 to 1 and 15 to 1. Occasionally, it stretched to 30 to 1, but even that was considered extreme. What we're seeing today, Hunt argues, is completely abnormal. A ratio above 100 sustained for long periods has no historical precedent. It's a distortion created by financialization and the perception of abundant supply. For years, silver was held down by large above-ground inventories, vaults full of metal that could be mobilized to manage price. But here's the part most people miss. Hunt points out that if silver isn't in a safe, inside the borders of your own country, accessible and unencumbered, it effectively doesn't exist. A lot of what's counted as supply is paper, rehypothecated, or inaccessible. The inventory advantage that once allowed suppression is quietly evaporating. And then comes the production problem. Hunt slows down when he explains this because it's the key. 60 to 70% of the world's silver supply comes as a byproduct of mining other metals, copper, zinc, lead, gold. Silver isn't the target, it's the bonus. Only about 30 to 40% of silver production comes from miners whose primary job is to extract silver. That's a structural nightmare. Because when silver prices rise, supply doesn't respond. A copper miner doesn't suddenly double output because silver is expensive. They're digging for copper. The silver just happens to come along for the ride. So demand can surge, prices can explode, and supply barely budges. That's not a normal commodity market. That's a pressure cooker. Now layer demand on top of that. Electric vehicles, solar panels, smart grids, medical tech, electronics, surveillance systems. The world is becoming more electrified, more connected, more silver intensive by the year. And now enter solid-state batteries. Hunt describes them as a genuine technological leap. Vehicles capable of 900 kilometers on a charge, 8-minute fast charging to 80%. It sounds like the future, because it is, but there's a catch. These batteries require enormous amounts of silver. Here's the line that makes the picture a world where silver simply isn't available anymore. Not scarce, not expensive, just unavailable. Hunt puts it bluntly, almost casually, which somehow makes it more unsettling. No silver for gadgets, no silver for solar, no silver for the endless list of technologies we've built our modern lives around. And once you really sit with that idea, you realize how fragile the entire system suddenly looks. Take solar energy alone. Every solar panel relies on silver paste for conductivity. It's not optional, it's essential. And the planet is installing solar panels at a record pace, driven by policy, subsidies, and the push toward electrification. Add to that smartphones, laptops, servers, medical devices, satellites, and military hardware. Defense applications, Hunt notes with a raised eyebrow, tend to get very hot very quickly. And when things get hot, governments don't ask about price. They ask about availability. Everything needs silver, everything needs more of it. That's where the equation completely breaks. We're entering a phase where silver demand could be 5 times current production, maybe 10 times, possibly even 20. And the supply side barely moves. You can't spin up a silver mine like a coffee machine. It takes years, regulatory approval, massive capital, and enormous energy inputs. And for decades, it hasn't even made economic sense to do so. Silver has been priced too cheaply for too long to justify large-scale investment. Miners didn't avoid silver because they were lazy. They avoided it because it didn't pay. Now the market is about to correct that mistake, and it won't do it gently. Hunt isn't describing a normal bull market where prices grind higher and everyone feels reasonably comfortable. He's describing a rationing event, a situation where price is the only mechanism left to balance demand with reality. When there isn't enough metal to go around, price doesn't ask for permission. It simply moves to a level that forces someone out of the queue. The market will fix it, Hunt says, by sending silver to levels that seem impossible today but obvious tomorrow. That's how these things always work. In hindsight, everyone nods and says, of course. In real time, almost nobody believes it. What makes this moment particularly dangerous and potentially profitable is that the supply crisis has been hiding in plain sight. Analysts talk about demand. They talk about green energy. They talk about electric vehicles. Very few connect all the dots at once. Hunt does. And once you see the full picture, it's hard to unsee it. But after laying out the technicals, the supply constraints, and the demand explosion, Hunt turns to what he knows is the hardest question of all. Not when to buy, when to sell. This is where most fortunes are lost, not made. People obsess over entries and completely ignore exits until emotions take over. Hunt addresses it head on. The exit for silver, he explains, won't be triggered by a round number. Not $100, not $300, not even $500. Those are psychological landmarks, not analytical ones. The real signal will come from the same place the entire move began, the gold to silver ratio. That ratio, the one that's been stretched beyond historical logic for decades, will eventually collapse into single digits. When that happens, silver won't just be expensive, it will be dominant. And that's when the final phase begins. The phase where discipline matters more than conviction, where holding becomes harder than buying ever was. Hunt reminds his audience of the law of the parabola. Exponential moves don't distribute profits evenly over time. They concentrate them at the end. Half of the gains often come in the final 5 to 10% of the move. That's the stretch where everything feels wrong. Where prices are high, volatility is extreme, and every headline screams bubble. Imagine silver at $200, then $300, then $400. Every instinct you have will tell you to sell. The media will parade experts warning of collapse. Friends will tell you you're being reckless. Family members will gently, or not so gently, suggest it's time to take profits and be sensible. Then silver drops 15% in a week, then 20%, and your brain lights up with relief. There it is, you'll think. That was the top. Hunt warns that those moments are often gifts, not signals. Professionals don't exit all at once. They scale. Partial profit-taking removes emotional pressure while keeping exposure to the main event. Hunt typically closes around half a position, letting the rest run. It's not about being greedy. It's about respecting the nature of parabolic markets. He's clear about his own roadmap. The $333 level is important, but not final. It's a resting place, a zone where price consolidates, weak hands exit, and strong hands quietly add. From there, the next leg begins, and that's where things get uncomfortable. We expect to do better than that, Hunt says calmly, much better. Then he adds a line that changes the entire tone of the conversation. At that point, I don't know what the dollar means. That's not a throwaway comment. It's a recognition that 4-digit silver doesn't happen in a stable monetary environment. If silver is trading at $1,000 and $1,500 or $2,000 in old money terms, it's not because everything went right. It's because something fundamental broke. Financialization failed. Paper promises were exposed. Inventory vanished. And the world started scrambling for physical reality instead of digital reassurance. Hunt isn't celebrating that scenario. He's preparing for it. He's realistic enough to understand that generational wealth often arrives during generational stress. When silver reaches those levels, it won't be a victory lap for society. It will be a signal that the old system no longer works. He brings the audience back to the long-term chart one final time. The quarterly structure stretching back to the 1950s. 75 years of compression, energy building like a coiled spring. When these squeezes resolve, he explains, prices don't rise, they erupt. And according to the technicals, that eruption has already begun. The breakout is confirmed. Momentum is accelerating. The contagion phase is underway. The question now isn't whether silver moves higher. It's whether investors can emotionally survive the journey. Hunt's message to silver holders is balanced. Encouraging because the setup is extraordinary and the opportunity is real. Cautionary because the biggest mistake hasn't even happened yet. Selling too early will haunt far more people than buying too late. Silver endings are rarely polite. History shows that this metal doesn't top out quietly. It spikes, it crashes. It spikes again, it overshoots. And then, just when everyone is convinced it's going to the moon, it reverses hard. But Hunt doesn't believe that moment is anywhere near today. Not this month, likely not this year. He sees this as a multi-year move, one that will permanently reshape the precious metals landscape. And his final advice circles back to his philosophy. The markets want to give you gifts, pullbacks, doubt, volatility, moments where fear dominates logic. Those are the moments to pay attention, not panic. Francis Hunt has laid out the full framework, the technical structure, the supply reality, the demand shock, the entry tactics, the exit signal. What happens next depends on the individual. Will you buy what feels expensive now but may look laughably cheap later? Will you hold through turbulence and trust the process? Or will you be one of the many who say, I knew silver was going higher, I just couldn't stay in? The clock is moving. The train is already rolling. Whether you re-onboard or watching from the platform is a decision no one else can make for you. Hunt has handed you the map. What you do with it is entirely up to you. And with that, we'll wrap it up. Drop a comment and let us know what you think about Francis Hunt's silver outlook. Are you adding, holding, or waiting? If this opened your eyes, hit the like button, subscribe to Boring Currency, and turn on notifications. The financial weather ahead isn't getting calmer, and we'll be here to navigate it together. Stay safe, stay informed, and stay positioned. See you in the next one.